Thanks for organizing this great event. Appreciate the opportunity to be here. I have good news for everyone. I have nothing to sell you today. I'm not going to talk money to you about what you can buy from me or not buy from me. Frankly, I don't care. I've made my money. I have nothing to give you but information. How you use it is up to you. But let me say this. For the last 3 years, it's been easier to make money than at any time in the half a century that I've been trading. I made my first trade in 1967. So it's been a long time. If you're not making money in these markets, there's a problem. You have to figure out what that problem is. Fortunately, there are not too many areas where you have to look for that problem. They're easy to find, but you need to fix them because you will never find a market as easy as this in which to make money. What I want to talk to you about today is something that has not been in my repertoire until recently, and that's cryptocurrencies. The good news about cryptocurrencies is that everything that works in the regular stock and futures markets works extremely well in currencies, in cryptocurrencies. In fact, it works better. There are fewer false signals. The moves are big, but you need to be very careful what you do. The reason these currencies work better than anything available is because they are pure markets. They're not regulated by government. They're buyers and sellers. They're impacted by news and other relationships, but it's very simple and very straightforward, but you need to be careful. So what I'm going to give you today is as much of a warning as it is an opportunity. So let me advance my slides. Hold on a moment, please. So the thing about cryptocurrencies is this. Are they real? Not real? Can you create something that doesn't exist? Do they exist? Where do they exist? And all those things that some people find important. I do not. It matters not to me. As long as there's a market that I can trade, if it's legal, moral, and ethical, I will trade it if there's money to be made. So let's not worry about what the cryptocurrency is. We have a few issues we have to deal with. For example, that there are vast fortunes that have been made and can be made, but the question is, how are you going to do that? I've said many, many times to my students and traders and friends all over the world who've traded with me, if you can't test it, you can't trade it. So the good news about cryptocurrencies is there's a lot of action. The bad news is, in some cases, there's not enough history to really test it. So we have to rely on strategies that we've already developed over the years that have been tested and proven to be effective. So if you're an emotional trader, if you're a bad trader, if you're losing money in other markets, you will lose it faster in the cryptocurrencies. I want to give you some examples and tell you some of the things you need to be careful of before you start trading these markets. But let me give you this information. About a year ago, my son Elliot, who is in Silicon Valley as an engineer, tried to get me to trade cryptocurrencies. He told me to open a Bitcoin account. Of course, being from the old school and having traded other methods in other markets, purely technically, I did not want to do it. He convinced me last June to open a Bitcoin account. In fact, he did it for me. I put money into Bitcoin, held that Bitcoin, and that was right over here. Looked at my technical indicators, which are on the screen over here, and sold my Bitcoin over here. It was a 300% gain for me. I've been trading Bitcoin and Ethereum ever since. The question is not whether we can trade it. We can trade it. The question is, what methods do you use? I want to show you 4 methods today, which I'll explain as thoroughly as I can. If you can't get the information thoroughly as you want to, or the rules as clearly as you want to, you can go to my website and look at the 6 best timing triggers video. I think that will help you. So let's put it in perspective. Let's go to the next slide. So, brief history, you can find that anywhere on the internet. I'm not going to waste your time with that. What they really are, excuse me, but who the hell knows what the cryptocurrencies really are? Who regulates the market? Nobody. What the hell is blockchain? Read about it. In other words, I'm not going to waste your time with all of this stuff that you can figure out on your own or get anywhere on the internet at no charge whatsoever. There are basically 3 major currencies that we trade right now: Bitcoin, Ethereum, and Litecoin. Bitcoin, very high in price, about 15,000 bucks. Ethereum approaching $1,000 per coin, and Litecoin about 200 to 300. So if you're going to start trading, start with Litecoin. You make mistakes. If you lose money, it won't kill you dead. If you make money, it'll be nice, but it'll be consistent and small. Very great place to start trading Litecoin. So don't begin with the most volatile and most expensive market in the basket. Start with something that's small and won't hurt you. Let's look at what works and what doesn't. But before we do that, let's ask the question, what really is a cryptocurrency? I'm going to read to you, which I try not to do in my webinars. I try to do it in a way that's going to be intelligent. But think about this. We buy and sell things that don't exist in order to profit from price fluctuations. If the thing we bought that does not exist goes up in price, we sell the thing that does not exist to someone else who's interested in buying the thing that does not exist in the expectation that they can sell to someone else who at a higher price than we make money. So it's a very elusive, ethereal, if you will, no puns intended, concept. As I said before, I don't care about any of this stuff, and you can come back and look at the slides yourselves and figure out what I'm talking about. But there are some issues. First of all, people will say, we're in a bubble. What does a bubble mean? Is there a definition of bubble? We're going to show you about that in just momentarily. Do we have objective definitions? The most important thing is this, and I'm going to review all this. You can read these things on your own. I'm not going to read them to you. Determine your place in terms of time and methodology. And this would hold true for any kind of trading that you're doing. Are you a day trader? Are you a short-term trader? Are you an investor? What's the definition of each? If you say you're going to trade cryptocurrencies, day trade, since it's a 24/7 market, what is the definition of a day trade? Do you want to be in and out 30 or 40 times a day? Does your sleep matter to you? Do you want to be up in the middle of the night trading? These are all questions that you have to answer, and only you can answer those questions. For me, give you a tip. If you're going to trade short term on any of the cryptocurrencies, use the 6-hour chart, 360 minutes. In my research, that has proven to be the most stable. When the moves happen, they'll be big enough to make money on. When the moves happen, they'll be small enough so you don't get hurt really badly. But most of all, as you increase the time frame for any methodology, the consistency improves. The speaker before talked about seasonality. He showed some charts, 5-year seasonals, 10-year seasonals. My website, seasonaltrader.com, one of my websites, we look at seasonals that have happened over the last half a century. Why is that? Because taken out of context, any 5 years or 10 years can be a random event. Over 50 years, it's not a random event. So if you're going to test something and say, hey, I'm looking at this Bitcoin chart and I've had 16 trades in a row and they've all been profitable. The bottom line, meaningless. When you've had 100 trades in a row, or you've tested 100 trades and you have numbers there, that means something. If you can do 50, that's fine, but the more, the better. So define your time frame. What's the ideal time frame for you? Are you going to trade on the daily charts, the monthly charts, the weekly charts, the intraday charts? Don't labor under the false impression that the more you trade, the more you make. You reach a point where the time frame is so small, the profits aren't worthwhile, and there's too much random behavior in the market, and you will, I guarantee you, lose money if you do that. Let's look at a couple of more things. So I want to teach you some good stuff to help you make money, and I want you to decide what's right for you, but you need to determine the time frame. I'm going to skip a couple of slides about bubbles. I want to show you something. Here's a stock. This chart was made just a few hours ago. Symbol BURG. First of all, let me say I have no idea what these people do. Somebody told me that they own part of Hooters, the restaurant. They announced a couple of days ago, in fact, right here, that they were going to start paying customer loyalties in a customer reward program in Bitcoin. So all it takes is the word Bitcoin or blockchain, where you can take a $2.50 stock that's not going anywhere and get an 80%, 90% increase literally overnight, followed by a 40% decline literally overnight. So you have to ask yourself a question. Do you want to participate in this insanity? Now, let's talk about the technical issue. On this chart, I've got my indicators. This is called the moving average channel. In fact, let me see if I can get my pointer here. One moment, please. Let's get that pointer. This is called the moving average channel. The top of the channel, the red line, is a 10-period moving average of the high. The green line is an 8-period moving average of the low. At the bottom of the screen, I've got my trigger. The blue line, Williams accumulation distribution, and its moving average, the red line, 57. So this would constitute 2 complete bars above the top of the channel, buy setup, buy trigger, buy the bottom of the channel, get out at the top of the channel, buy the bottom, get out at the top, buy the bottom, get out at the top, buy the bottom, get out at the top or higher. Very simple. So the good news is this: even though this was an absolutely insane, crazy move, it was triggered by my indicators, the rules of which are 100% objective and easy to learn. But when you get moves like this overnight, most people will get this wrong. By the time most people found out about this move, this stock had already opened right over here. So there was very little gravy left. Then people panicked and got out. And this is a very current chart. You may have heard of it. Let's go to another one that you might find interesting. How about this one? Long Island Iced Tea, which changed their name to include blockchain. The name change occurred, in fact, let me get my pointer back again. One moment, please. And by the way, these are just a few of many examples. The name change occurred over here, and again, literally overnight, the stock jumps 303% and gives back 60% of that over the next few days. The good news is our timing triggers caught this move in terms of its triggers and timing. But the bad news is you will not be able to participate in these moves unless you're scanning for charts and triggers before they happen. Because these days, by the time these moves happen, they're over with, and you need to be in advance of the move. You need to be ahead of the move. You need to anticipate the move. So when you look at stocks like this, or whether you look at futures or the actual Bitcoin, these are things you need to be prepared for if you want to trade short term. After the buy trigger, we pull back to the bottom of the channel and get another opportunity to buy. So these are all things that are explained in the 6 timing triggers video. But I want to show you some more things that are very important. And I have learned over the years, the most important thing for me is to limit my risk. As soon as I can get out of the risk zone, that's the most important thing for me. After that, where I've minimized or mitigated the possibility of a loss, then the real gravy comes. So let's take a look at a couple of other things. All the indicators that I'm showing you here today are preliminary. As I said, they're all explained in the rules. If you can't afford the 6 best timing triggers video, first of all, you shouldn't be trading. But if you cannot afford it, no problem. Send me an email. I will mail it to you at no charge because I want you to get this right. That's the most important thing. No tricks, no gimmicks. So in your spare time, if you're really serious about cryptocurrency trading, here's an important glossary of terms. Make note of that. I've given you a brief definition of each term. Take your time, study it, and learn these terms because they will become very important over the next few years, especially this new term that most people are not familiar with, SegWit. So learn what this means. It's not necessarily going to help you make money, but it will help you understand what you're doing, and that's very important to understand what you're doing and why you're doing it other than just for the idea of making money. Let's address an issue. Bubble. This is a chart of Litecoin, the cheapest of the cryptocurrencies, weekly chart, showing what has happened since September of last year. So we're talking about a 1,100% increase over a very brief period of time. Before you call this a bubble and start giving it names, you have to understand what really is a bubble and what are you going to do with this? What does it mean? Notice the increase in trading volume, which means there's participation in this market. That's extremely good because it means the market is liquid and you can trade it. Let's look at this next chart. Litecoin showing the reaction of 40% in just a matter of days. Let's look at the history of tulip bulb mania. If you've never read the book, Popular Contrary Delusions and the Madness of Crowds, you want to read that book. This is a chart, thanks to the good people over at Elliott Wave Theorist, Bob Prechter, showing the bubble mania, the tulip bulb mania in Holland in the 1600s. Brief review, if you're not familiar with it, people started trading tulip bulbs thinking they had value. So the bulbs increased in value in a very speculative market and then crashed to the point of being worthless. So the question is that what's happening? Is that what's happening right now in Bitcoin? The answer is no. It's a viable market and it will continue. It's here to stay. You need to learn how to use it, but you need to learn how to use it within the context of what you can afford to do, not only in terms of money, but in terms of time and ability. Don't be one of those people who says you want to day trade and then walks away from the computer for 5 minutes and loses money because you weren't there. Determine your time frame. If you're interested, you can come back and take a look at this schematic. It shows the behavior of markets from the inception of a bull market, from the start of a bull market to the mania part of the bull market to the collapse. So the question is, where in the cycle are we? And the answer is, it's just beginning. This is a chart of the NASDAQ.com bubble. If you will compare this chart to what's happening now in Bitcoin and some of the other cryptocurrencies, we are still right about here, about ready for a correction before the big move up happens. So that has not happened yet. Compare the charts. Here's another one. This is again the NASDAQ. 750% increase, followed by an 84% decline, followed by the current bull market of 354% increase. History says it all. Bitcoin versus US dollar, 2,000% increase. Bitcoin versus US dollar on the daily charts showing a 30% decline. So why am I showing you these charts? Number one, if you're going to trade these markets and you want to be a buyer, buy on big declines. Definition, 30% decline or more in one day. I see some questions coming in here, but I can't read them. Tanya, could relay, let's take a 2-minute break and answer some questions. Tanya, could you relay some questions to me, please?
Sure, a couple comments. One of them are, what are the moving average settings?
The moving average settings on the moving average channel, the red line is a 10-period moving average of the highs. So let me go to one of those charts. Thanks, Tanya. Hold on a second, please. Go up to one of those charts. That would be right here. So the red line, moving average 10 high. The green line, moving average 8 low. So you will notice we are not doing moving averages of closing prices, which is what most people do. The bottom line is they don't work. Moving averages of highs and lows give you a channel, which you can see encompasses the highs and lows of most days. The bottom of the screen, the blue line, Williams accumulation distribution. And remember, this is Williams accumulation distribution, not volume-based accumulation distribution. And we've taken that blue line and we've taken a red line, which is a 57. That's 5/7 period moving average of the blue line. When the blue crosses above the red, we go into buy setup. When we have 2 consecutive price bars above the 10-period moving average of the high, we have a buy trigger, and then we buy the bottom of the channel support. Thanks, Tanya. Any other questions I can answer right now?
Yes, another question from George says, are you using a simple or an exponential moving average?
Great question. Everything I do is simple. So these are simple moving averages, nothing fancy. And by the way, you should be able to do this on any chart platform, anywhere, no complicated formulas. So I have nothing to sell you. There's no arcane trickery here. You can do this anywhere you want. Any other questions?
All right. And one more from Gary says, what type of MA, SMA or EMA?
These are SMA, simple moving averages, as I stated before.
Gotcha. And then another one popped in from Timothy, a 57-day moving average of price or William ACCU.
Yes, got it.
Okay.
So this is a 57 period moving average of Williams. So we're taking Williams, running a moving average of it. So these two moving averages down here, this moving average down here has nothing to do with price. We're taking the indicator and taking moving average of the indicator. And by the way, you'll find that to be a very effective strategy, taking moving averages of indicators. For example, a moving average of momentum. It works extremely well. Any other questions?
That's it for questions for now.
Okay, so let me go forward a little bit here. And again, I want to remind everyone, my objective here is not to sell you anything. I frankly don't care. I've made my money and I've done extremely well. What I care about is to get an email from you saying, you did what I said, it's working for you, and you're happy. That'll make me happy, real happy. I'll show my kids and they'll say, hey, Dad's not a bad guy after all. So let's go back to here. So I was saying before, I've shown you some of the swings that we get on Bitcoin. Remember, this is a 360-minute chart. This is not even a daily chart. It's a 6-hour chart. So the first and foremost thing that I can tell you is this. If you want to make money in any of these cryptocurrencies, buy the big breaks. Definition of a big break, at least 20 to 30%. They will happen fairly regularly. You don't have to wait a long time for them to happen. Next item, buy the bottom of the moving average channel support. I will show you some of those charts momentarily. In fact, let me do this. Let me go to the next chart. Here we go. Here's another example. This is a daily Bitcoin chart. And by the way, as I said before, all of what I'm showing you here is applicable not just to the cryptocurrencies, but to any market whatsoever. It just so happens that it works better in the cryptocurrencies because, as I've said before, they are a pure market. Most indicators work better in a pure market. Example, people say, I want to trade S&P. Guess what? S&P is the hardest market to trade. Why? Because everybody and their brother wants to trade it, and they come at the market with different perspectives. Banks, governments, short-term traders, day traders, hedgers on the buy side, hedgers on the sell side, impacted by all sorts of fundamentals. But you say to somebody, trade cocoa futures. They'll say, what? They have no sex appeal. But the bottom line is that market is impacted by relatively few fundamentals, which makes the behavior of the indicators more stable. Super, super important. And the previous speaker, a lot of respect, said, be a specialist, not a generalist. And he is absolutely right. You can't trade everything. You can't trade everything that moves in every time frame. You're going to lose money. You're much better specializing in a few things and doing those things well than you are in trying to do everything. And absolutely agree with him. So let's take a look. Let me show you this process here. Back here somewhere, the blue line, Williams accumulation distribution, went above the red line. At the same time, highlighted in blue, we had numerous bars above the top of the channel, which put the market into a bull trend. This market has remained in a bull trend ever since, because never at any time since the start of this chart did the blue line go below the red line. In other words, it continued to show the trend is higher even throughout all of these reactions down. You will also notice that every time we came down to the green line, which is the 8-period moving average of the lows, you bounced right back up to the red line or higher. There have not been any sell signals whatsoever on this chart since the beginning of this chart back in November. In fact, every time we've come down to the bottom of the channel, there's been an opportunity to buy, whether it's been here or here or here, and this chart is not up to date, and that's the way it works. There's another strategy we can do, and let me show it to you. I have another chart. It may look similar to you, but it's very distinctly different. And let me explain it to you and learn some concepts from me. Most people, as I said before, look at the closing price or closing moving averages. I don't do that. This chart shows something entirely different. My two lines at the top of the screen, the red line, an 8-period moving average of the close. The blue line, or the green line, an 8-period moving average of the open. So this chart is merely comparing closed to open, closed to open, closed to open. So what good is it? Think about this. As a market is moving higher, the closing price for any given bar or candle is apt to be greater than the opening price. It's the nature of the beast. In about 70% to 80% of the cases, in the bull market, the close will be higher than the open. In a bear market, the close will be lower than the open. That's a very important tip for day trading. In the old days when the trading pits were active, traders would say, what kind of market is it? Oh, it's a bull market, I'm going to buy the open and get out on the close. It's a bear market, I'm going to sell the open and get out on the close. Extremely effective concept, which we've put into numbers here by taking 8 open, 8 close, and these are simple moving averages. When the 8 open goes above the 8 close, which is marked by my software by a green bar, and the indicator at the bottom of the screen crosses above its moving average, and this is not Williams accumulation distribution. It's another concept applied in this similar fashion. We have a buy trigger. As long as the bars remain green and the red remains above the blue, we're in a bull trend. And this will all be explained to you in that video, so there's no need to try and remember all of this right now. And you should be able to get the recording of this and reread it and watch it yourself at some point. So this is another approach. And by the way, these are not uncommon moves. I didn't cherry pick these. I picked them because they're very consistent. And it doesn't matter what time frame you pick. As long as the time frame is not too small, the indicators will remain consistent. Let me show you another one. And by the way, a couple of things. In anticipation of the fact that you may want to trade the cryptocurrencies, there are a number of ways in which you can do this. You can trade them as cryptocurrency and with a GDAX account, which I'll show you momentarily, or you can trade them in futures, options, spreads, binary options, which you may want to look at. In other words, you're making a simple bet, higher or lower by a certain date or time. And let's take a look at a recommendation I gave 8 weeks ago in something called Riot Blockchain. Here was how the process developed. Let me show it to you. Buy setup, buy trigger, follow through to the upside, numerous opportunities to buy the bottom of the channel, increasing spikes in volume indicating that the market is liquid and can handle anything you want to throw at it in terms of size. But before we do that, I want to give you a warning. I'm not sure if everyone here has heard of what's called pump and dump, but I believe that in order for me to give back to an industry that has made me a lot of money, I want to warn you about something. Pump and dump. If you've never heard about it, let me explain it to you. It's really, really simple. Find a stock. Let's say you're the person who's going to perpetrate the pump and dump scheme. Find a stock like Long Island Iced Tea that's going nowhere, hasn't gone anywhere in a long time, and it's cheap. Start buying shares in that stock. Then, when you're all done buying your shares, make an announcement. Long Island Iced Tea is now going to change their name to Blockchain Long Island Iced Tea or Blockchain Riot. The news comes out. Before the news comes out, you send out an email campaign to hundreds of people saying, we're recommending this stock. It's going to go crazy. People start buying that stock. The news comes out. The stock doubles or triples in value overnight. You look like a hero. Those people who bought the stock, and this whole process is described right over here. It's illegal, by the way, in case you're wondering about doing it. Those people who bought the stock early on, if they're smart enough, they're getting out. The insiders who bought this stock in large quantity before this ever happened, they've already pumped the stock up, and now, while the public is buying the stock, they're dumping it. It's called a pump and dump. It's a classic. Happens very frequently, and it's already happened in a number of stocks, but be prepared. You're going to start getting emails from all kinds of places telling you to buy this stock because it's going to go crazy. If it's got the name internet, if it's got the name Bitcoin in it, if it's got the name blockchain in it, or any of the other names that are going to become popular, it's going to be a victim of pump and dump or a candidate for pump and dump. I don't want you to get caught up in that. Let me show you a couple of more things. Here's another one that I've traded quite a few times, Marathon Patent Group. What do they have to do with blockchain? They've indicated that they're going to be using blockchain technology. As soon as they started indicating the use of blockchain technology, the stock goes crazy. But before that, gives us a buy setup, buy trigger, buy setup, buy trigger. Comes back down to the bottom of the channel support. I buy it, I'm out at the top of the channel. Very quick trade. Let me show you something else. Here's another one. Overstock, also involved in this madness because I believe they indicated they're going to start their own cryptocurrency. A substantial stock, not a cheapie, but again, notice the pattern. 2 bars above the top of the channel, Williams above its moving average. The stock goes crazy, comes down to support, and goes right back up again. This chart's back up in the 70s now. Let's go on to another chart. Wait one moment, please. I've got a lot of charts here to show you. I want to show you one more methodology. Just a moment, please. Okay, so the strategies we're using. Moving average channel. Momentum, moving average 1818. What I call the 8 open close or the 888 strategy, which I showed before. I want to show you the range breakout, and this is very preliminary. I want to show you this before we run out of time. One moment, please. This is a copy of GDAX, by the way, if you've never seen it before. This is a copy of sample of one of my accounts. Very easy platform. It shows you the offers, the bids, buying and selling, the graph of the chart. Very simple platform which you put in orders in. Much easier to use than most brokerage accounts. But I want to show you something else. There has been something called the range breakout. Let me explain it to you. This is a 60-minute chart of Bitcoin US dollar. This here is the beginning of the day, right over here. I look at the first hour of the day. I make note of the highest price and the lowest price during the first hour of the day. When I close below the low of the first hour, which happened right over here, I'm short. My target is 1/2 the range of the first hour. Hit. I'm then out of my position. Then later on in the day, we close above the high of the first hour right over here. We are buyers. On the next opening bar, we get out at the first profit target, which is half this range. Second profit target, which is the full range. And we hold the trade with a trailing stop, the green line, 3-period moving average of the low. Let me show you another one. And then I'll take some questions from you. Here's another range breakout. Beginning of the day, right over here. Sell trigger, follow through to the downside, achieving all profit targets. Here's another one. Range breakout, first hour of the day, closing above the first hour of the day right over here, following through to the upside, meeting all the profit targets. And by the way, I realize that I'm going a little bit quick, but they've only given me 45 minutes to teach you everything I've learned in half a century, so it's going to have to be quick. I've automated my strategies to give me the signals automatically on the charts. So this is what I call the 8 open close 80888 strategy, which I showed you before, showing the computer getting me in, reaching my profit targets 1, 2, and 3, and getting me out. And another one, automated strategy again, showing the triggers, the entries, and so forth, the profit targets. And again. So what I'm going to do now is take some questions and wrap up, so I'll give the next speaker an opportunity to do his or her thing. So Tanya, if there's questions, could you relay them to me?
Sure, we have something from George. He says, I don't have a futures account to trade cryptocurrencies. I can buy GBTC as a stock. but I'm not sure what the tax reporting consequences of doing that. Are you familiar with GBTC and what the tax consequences might be? I have an IRA brokerage account, but I'm not sure if that means I cannot worry about the tax reporting or not for GBTC.
Gotcha. I'm very familiar with GBTC. It's pretty expensive as a stock. It's basically a holding company. They bought Bitcoin quite some time ago and made a lot of money. I'm not a tax guy, but I imagine it would be taxable like anything else. The bottom line is this. You may not be allowed to buy it for your IRA. I do know this, that Merrill Lynch in one of my accounts today disallowed trading in Bitcoin or anything having to do with Bitcoin. In fact, they disallowed trading in even in marijuana stocks. So it depends on your conservative brokerage firm or otherwise. That's the best I can tell you about that. Futures, I would not be trading, even though I'm a futures guy, I would not be trading futures in Bitcoin at this point in time. I don't think the market is well established enough as a futures trading, and the volume is not what I'd like to see. It should be better.
All right. And Priscilla asks, my platform does not allow a 6 hour. Can I use this on the 4 hour?
Absolutely, you can use that on the 4 hour, but remember this, the shorter the time frame, the smaller the profits, the greater the inaccuracy. As you increase time frames, you increase the accuracy and the size of the move, so you have to find the time frame that's right for you, but 4 hours should work pretty well. Any other questions?
Yep. And then Hermie says, is this the first hour of the day, U.S. market?
It is the first hour of the day, U.S. market.
Okay. All right. Josh asks, what are the green and red line indicators called, and can you get that? And how can we get that?
Yeah, let me show you. So just 1 second back, right over here. The green and the red line, I assume that he means down here at the bottom.
Yeah, he wrote another comment just to clarify. The green and the red lines in the last chart at the bottom window.
Yeah. So what we've done is this. And again, I don't want anything to be mythical or mystical here. Everything is disclosed. If you notice, as the red line and the blue line over here as a market begins to top out, the distance between the lines gets smaller and smaller until eventually they cross. We've turned that difference into an indicator, which is this green line over here. I've taken that green line and slowed it down with the moving average. And therefore, because I've slowed it down with the moving average, I get crosses where the distance between the lines crosses above and below its moving average. So this red and blue line is the simple subtraction or difference between these two lines. The blue line is an 8-period moving average of that green line. So when they cross like this, I have a sell setup. When the bars up here turn red, meaning that the moving average 8 close has crossed below the moving average 8 open, I get a sell trigger. I know it sounds a little intricate. It's detailed, but it's not complicated. And I'm glad to explain this to everyone who wants to know it. Easily done. I'll be glad to send you a webinar that explains it. Just go to my website. Or in fact, you can just send me an email, jake@trade-futures.com, and I'll send you what you need.
Oh, he actually said he meant the vertical lines.
Oh, the vertical lines. Oh, you mean these lines over? Oh, these over here? These indicate a buy trigger. That would be a buy trigger right over here.
Yes.
And the previous chart right over here. This would be a sell trigger right over here. Buy trigger. So these lines are simply little cheater lines to help you not have to think about what you're doing. So this is go ahead and sell because the red is below the blue and because the lines have crossed. So I think I answered that question.
Yes. And then we have a comment here from a Jack. He says, Jake, my first wonderful bride passed away 12 years ago. I want to say thank you. You were a big part of her trading life, and I'm still with you, man.
Oh, you know what? You're going to make me cry. Thank you so much. And my condolences to you.
This is from JB. It says, how do you find it says, how do you fund the GDAX account? Is it easy and fast? I've been trying to set up an account with Coinbase and Bitstamp for 2 weeks with no success because they are overloaded. What do you recommend?
There was a point a couple of weeks ago where GDAX was opening 100,000 accounts every couple of days. Their volume increased by 30 times. I transferred some money from a Bank of America account into GDAX. It took a week for the money to get there, even though my account was debited immediately. Unfortunately, right now, that's the best we can do. There are a couple of others that will accept cash faster, but that should change and improve significantly over time.
Okay, and that's it for the questions right now.
Well, then that's it for me. I want to thank you for putting together a great show, giving me the opportunity to be here. And again, I want to say Bitcoin and this stuff is really not my expertise, but it has become so since I've done my 300% profit, which is really great. I can't complain about that. So I'm interested in the market. I'm not one of these people who believe that Bitcoin and blockchain are going to change the world. I could care less about that. But if it's something that can be traded intelligently and rationally and give us an opportunity to do it with rules, then I'm all for it. So thanks everyone for being here. Best of trading to you and Happy New Year. Thanks, Sonny, for putting this great show together.
One last thing, if we could squeeze it in.
Sure.
Gary asks, is GDAX applicable to Canadians?
You know, I grew up in Canada, but I don't know the answer to that question. I don't see why not. I haven't heard anything about Canada outlawing participation in GDAX. I'm pretty sure they're licensed in Canada, but you might want to ask them. They've got a website, coinbase.com.
Okay, and if you would just put up your last slide so that people can see your contact information, that would be great.
Right over here. If I can help you, drop me a line. There's no charge for it. I'll send you the video. Just want you to make money. That's my goal here. So my email address, jake@trade-futures.com. My website, tradefutures.com. And a couple of addresses for me, okay?